You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we like to think so around here, Options Insider Radio Network. If you're new to the show, first off, welcome. Secondly, where you been? We got a lot of great archives you guys can check out. Easiest place to do just that, theoptionsinsider.com. Right-hand side of the homepage, you'll see all the shows there. Click on the one you want, this case, Volatility Views, and you're off to the races. A full, I think it's 5+ years worth of archives up there now. So you got quite a task ahead of you. Of course, you can always get it. iTunes, TuneIn, Stitcher, iHeartRadio, all those fun places as well. If you want to get it on the App Store, iOS and Android, just search for Options Insider Radio Network. And however you listen, make sure, including, by the way, those of you who can join us live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, MIXLR. Just grab that link that we tweet out all the time or email out or put on Facebook or anywhere else you grab. And just click on it whenever you feel inclined, and you too can join the live party, ask questions, listen to the show before it goes out. A little bit of an advanced treat for you guys. You get it before the podcast folks. You get to be the cool kids in the room and have it first. So that's what you want. I know a lot of you guys like that. Then head on over there at Mixlr and grab it and join us. We love to see you there every Friday. Ask questions, ask comments, give Russell a hard time, all that fun stuff. And however you listen, at the end of the day, make sure you hit us up with those questions, those comments. We do love to hear from you guys. And joining me on the old program today, let's go in order of proximity. Let's start with a guy who's probably right down the street, somewhere in the global Carmen line / option pit HQ. We are joined by the grease meatball himself, Mr. Mark Sebastian. Mark, welcome back to the Volatility Views program, sir.
Hey, it's a happy Friday. It's a great Friday. It's a good day to trade. Happy I'm here.
You're happy. I'm guessing I'm just going out on a limb and say your fly is looking pretty good. I haven't checked, but I'm going out on a limb and say you're happy about your fly.
It's doing all right. It's fine. I tried to do more of it, and they wouldn't sell it to me.
I guess that's a good sign, I guess, right?
I guess so.
How is it now? Oh, wait, we're out of here. I have to go to the bathroom. I remember that old trick. Oh, excuse me, I have to go. Yes. So, yeah, we'll see. We'll get into that in a little bit. Evasive floor trading tricks and more coming to you soon. Cutting edge news. Also joined a little bit farther away from home by way of Kansas. We have Mr. Rhodes. He's visiting the various satellite offices of CBOE, Mr. Russell Rhodes, the Director of Education, and many, many other titles over there in the land of CBOE. Someday, hopefully in the next 5 to 10 years, he can also put Dr. VIX on his business card, because he will be indeed a doctoral thesis student have be completed. Mr. Soon-to-be someday Dr. VIX, welcome back to the program, sir.
I am, as always, thrilled to be here. I am enjoying my first visit to the Lenexa, Kansas offices of CBOE, which is basically we acquired through our acquisition of BATS 2 or 3 weeks ago. I did a teach-in on SPX, VIX, and RUT, and needless to say, VIX got by far the most questions and the most love.
What a surprise. VIX sucking up all the oxygen in the room. Lenexa, is that like a suburb of Kansas City?
You know, it's funny, if you put the address of this place in, on some maps it shows up as Overland Park, and some places it shows up as Lenexa. We're just on the Kansas side and south of Kansas City proper.
Okay, because the Bats guys always hit me up to go to Kansas City. They never said come to Lenexa, Kansas, which I probably would have been like, oh, maybe I'm busy. But Kansas City at least has a little bit of a better ring to it. You can go grab some barbecue, all the other myriad things they have going on down there. And last but not least, we are joined. He's been on once before. It's been a while, though. We thought we'd bring him back on because there's a lot cooking in his neck of the woods, a.k.a. the international portion of the volatility spectrum. He is Ricardo Manrique, Executive Director of Index Business Management in the derivatives section over there of MSCI. That's a long title there, Ricardo, but welcome back to the Volatility Views program.
I have to shorten that one up. Well, thanks for having me back, guys. Appreciate it. I had a great time the first time around. Excited to be back the second time around. And coming from chilly New York, where I'd say, if anything, the volatility in temperature and weather has spiked over the last couple of weeks. So if we are in the low vol environment, that definitely doesn't show up in the weather here on the East Coast.
Yeah, you guys have a high volatility of weather out there. Ours this week has been a little crazy, but previous to that, it's been pretty much very nice and mild temperate. I keep joking, Chicago now the Miami of winter, so Miami of global warming at the very least. So we'll see. Well, you guys in New York are getting the teeth of it. We're getting a pretty good run of it over here. But we'll shut down the weather review right now and keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, like the man said, welcome to the Volatility Review. This is the portion of the program where we break down the week that was and indeed still is from a volatility trading and trending perspective. We're not there yet. That's the end of the show for the crystal ball. But spoiler, a lot of our predictions not looking too good unless we get a nice aggressive sell-off, which could happen. We got an hour or so to go. That could happen. It doesn't look like any of us are really going to be a quote-unquote winner in the outlying sense this week. But we shall see. Stranger things have come to pass. Right now, as we are recording this and streaming it live Friday on the 24th of March, right around noon central here, most of the major indices slightly up on the day. Tech-heavy NASDAQ up a little more, up about 0.6% or so. And VIX Cash, after taking a nice inhale for the lion's share of the week, getting north of that 13 handle. I haven't seen that in a little while. Now finally selling off a little bit today, heading into the weekend, right around 1270 or so, kicking off the show here. Speaking of kicking off the show, since Ricardo is our guest and you haven't been on in a little while, I thought we'd give you pride of place here on the Volatility Review. I thought we'd actually start looking back a week or two. We did a great show from the CBOE RMC conference. We did a lot of great deep dive. It was myself and Russell. We had Ilian from Wallach Beth. We had Bill Luby from VIX and more, kind of giving all of our perspectives. But Ricardo, you were out there as well, and you actually were on a panel talking about a lot of things that I know are near and dear to your heart and to MSCI, which is effectively what's going on outside of these shores, which is something we don't get to talk about a lot here on this program as well. So I thought we'd start there. Why don't you give our listeners here a little bit of an overview of what you guys were talking about? What was the crux of your panel over there at RMC a couple weeks ago?
Sounds good. So So we did a panel at the RMC out in Dana Point, which, as always, was a great conference. Lots of great content, lots of great attendees and presenters. So the panel that we did was titled "Options Out of This Country." So so a lot of what was talked about in the RMC obviously was dealing with local markets. So we wanted to set up a panel that gave an international flavor, and I was joined on the panel by our friends from Deutsche Bank and from Dry House Capital Management. So we talked about the international markets and what's going on, what are the trends, and what do we see in terms of the markets and in terms of the products. I'd say if I had to break it down into a couple of nuggets of information, there were a couple of themes that really came across. One is that definitely, and I think we see that in numbers, definitely there's a convergence of risk and return at a high level with regards to U.S. markets relative to international markets. And when I talk about international markets, I'm talking about developed international markets, so Europe, some of the Far East, as well as emerging markets. So there's generally, at a high level, over time, a convergence of risk and return. That's one point. But the second point is that when you look at where that risk and return is, there's actually a really large dispersion in return. So if we look at just the dispersion of, say, emerging market country returns over the last year in 2016, there's actually a really wide dispersion in returns. So while there is an overall convergence of risk and return, there's actually an increasing dispersion in sort of those sub-layers of what's driving those returns. So that was a really interesting point that we talked about a lot. And then another point that we talked about a lot was just the vol cycles. The vol cycles are, we're still generally in a low vol environment, trending low vol environment, but we've seen, massively aggressive spikes, and then equally on the flip side, aggressive reversions to a low vol environment. I'd say in the last year, off the top of my head, maybe 3 events. There was the China market sell-off in early 2016. There was the Brexit vote about mid-year last year, and there was the obviously the U.S. elections. And if you look at the sort of graph of rolling volatility for those events, you see massive spikes and then massive regressions back down to a low vol environment. But even within those spikes, there's really significant differences. So obviously for the Brexit vote, there was a massive spike in European vol relative to, say, US and EM vol. And then on the back of that, so what's the point of all that? The point of all that is that based on those overall trends, we've seen just a massive growth in international products, international vol products, both at sort of the composite level. So talking about options on EEM and EFA, which continue to be highly liquid and highly traded, as well as the index options, which are now listed on CBOE, so MXEA and MXEF, and then a lot of the underlying country options products. So there's just been a massive growth there, massive growth on the future side. So definitely, I think the market participants are seeing these trends. They're trying to manage that risk, and they're using a lot of the products in the market to do that.
So yeah, that was an interesting, because you're right, we don't get a lot of chance at RMC even to break down a lot of the international volatility and trading spectrum, but it is, a very important part, as we're seeing right now. International events are driving a lot of domestic volatility and vice versa. So we are seeing a lot of interesting stuff. Maybe before we shift off RMC really quickly, we all had a chance here on the program, Ricardo, to kind of give our thoughts, our overviews of the event, maybe some research, some studies, some conversations we had that we found particularly insightful or illuminating. Before we wrap up with your panel and everything else, any other thoughts that you came away from with RMC? Was there a lot more interest this year than in past in international products, for example, and maybe any other kind of takeaways you have from the event?
Yeah, I think there's definitely increasing interest in risk management and accessing and in risk management for international markets. I mean, we on our side as an index provider, we see that in terms of the trends of our clients and in terms of asset flows. We've now got now probably, I think, over $10 trillion in assets globally on our indexes. So that asset base is just continuing to grow. And, obviously that massive asset base needs risk management products, and a good portion of that asset base is based in the U.S. So I don't know, if you guys see that sort of in the day-to-day markets with, say, EEM options or EFA options or even MXEA or MXEF, but certainly the need is there, and I think the continuing growth of those products is a byproduct of that need.
Yeah, MSCI certainly does pop up on our radar, our EEM, I should say, does pop up on our radar quite frequently, as well as a lot of the other ones out there. I can see Russell, his ears are percolating over there in the suburbs of Kansas City. What do you have for Ricardo here, sir?
Oh, what I found interesting in your presentation was the discussion, or we're all starting to pay more and more attention to the French election, and I found it interesting that it appeared, at least at the time, that the EFA, which it's Euro Asia, I always say it's developed outside of North America. That's exactly way for me to remember. That's exactly, and it describes it as well. But at the time, it looked like there really wasn't a whole lot going on as far as discounting risk around the French election, although we're seeing it in some of the volatility indicators. Have we seen anything that's changing along those lines since we were all out in sunny California?
Yeah, I don't know. I mean, I'd say generally speaking, at least from my perspective, vol came down quite a bit in international markets. But it did spike, and if you look at, say, emerging markets, that's actually spiked over the last couple of probably like the last 2 or 3 weeks. So right now, 30-day vol is running a fair bit ahead of EFA vol and USA vol. So I don't know, the French election, the EFA vol hasn't really done a whole lot. It's still pretty close to USA, but I'd say where I see the big difference and where sort of the numbers tell me the big difference is more on the EM side than on the European side.
Okay. I hadn't even been looking there.
So we're going to do a deep dive into that in a little bit. We're going to have Ricardo give him a chance to do a deep dive into all things international volatility in a little bit. I thought first we'd kick things off back as we are wont to do here in the domestic realm, and a lot of things popping off this week, which is kind of interesting. I think maybe from a broad perspective, that long streak we had running without a effectively 1% or close to it downside move in the S&P is finally over. It was the longest streak, I think, depending on how you look, back until about the 60s or so, and it was about 110 days or so, and it came to an end earlier this week after some aggressive selling. A lot of different fingers being pointed at what actually drove that selling. People say Trump, the healthcare debate, others pointing fingers specifically at the option space, quote-unquote gamma imbalance, sucking the markets to the downside like a big black hole. We can get into that in a little bit, but a lot of interesting things popping off there. As I mentioned, as a result, we saw VIX Cash starting to trend north after it has been, stuck in that, very, very low teens range, actually touching briefly single digits not that long ago. It's been stuck in that kind of doldrums, and we've all been picking south in VIX Cash and the crystal ball for some time. Finally moving to the north a little bit, even if it was a bit short-lived, even though it looks like some of that sell-off is ameliorating right now here in the broad market. So we'll see. Our crystal ball predictions looking even worse by the minute here as the show goes on. And also, VIX getting a little bit of spark of life, too, with VVIX coming off the low levels it was at around the mid-70s or so, which is kind of the bottom of its 52-week range, spiking up into the mid to high 80s over there. So getting a little bit more life as VIX actually moving. And we also broke another streak this week out in VIX Cash where it had closed below 13 for about 54 or so consecutive, maybe 55. I think got about that far before it finally hit 13. But for about 55 consecutive sessions, which is effectively the longest streak there since February of 2007. So a lot of streaks coming to an end this week, which is kind of interesting. Maybe Russell, we'll start with you, because I know you like to pay attention to this sort of thing, these streaks and these runs of data. What was catching your eye this week, sir, from a volatility perspective?
Well, it was nice to see a new high in VIX this year. It'll be nice to see a new high in VIX that can drive. which will happen at some point. We got to get above 16 or so. So that, just the fact that we're finally starting to creep higher for one reason or another. The rebound in Russell volatility was pretty interesting as well. We actually hit multi-year lows late last week in Russell 2000 volatility, and with small caps really coming under pressure earlier this week, needless to say, we saw it rebound to at least an average premium to VIX. So the CBOE Russell 2000 Volatility Index going through the motions of hitting new lows and then rebounding very quickly was something I don't think everybody pays attention to, but it's near and dear to my heart.
Yeah, what's funny, Russell, is that on one hand, I feel like maybe about 6 weeks ago we were talking about the fact that the spread between VIX and Russell was like, you could drive a Mack truck through it. Things had gotten so out of hand. Then Russell Vol just completely collapsed and kind of overcompensated for where it was to where it went. And now things seem to have normalized. I mean, I feel like a 5-point spread between RVX and VIX is about right. I think it had gotten up to like 8 or 9 at one point, and then it was as tight as like 3 last week.
Mm-hmm.
So it's nice to see that spread normalize, and feels like all the over depression of volatility is maybe shaking out a little bit. And we're going to allow markets to move around again.
When I think of markets moving around, I often think, how can I summarize this in perhaps in poetry form? And one of my favorite poets did just that. Surprisingly enough, he took some time to actually hang around in the volatility ghetto this week. Let me just read you an excerpt of the work by this American icon. And his poem is thus: "Market down, you in a fix. What would have helped what would have helped is called the VIX. When stocks are weak and you're caught long, VIX responds with a move that's strong." Yes, that is American poet icon and soon to be Dr. VIX, Mr. Rhodes. What inspired you to turn VIX into poetry, sir?
My muse at CBOE, Hollywood Goodhart.
No, I like that.
Yeah, it was World Poetry Day. And Holly runs our social media effort over there. And she asked if I would, go back to my liberal arts days in college and write a flowery prose about my favorite thing in life, not my children, not my wife, but VIX.
That is indeed your favorite thing in life. I was a little caught off guard to see that. I will say, by the way, I know a lot of hardcore poets, and these days, the cool kids, they don't do rhyming poetry. That's like third grade stuff. So if you do rhyming stuff, they tend to look down their noses upon you. The beatniks of the world out there doing the poetry slams.
Mark, I actually wrote a poem yesterday myself, believe it or not, for my good friend Matt Benson.
Do I want to hear this? Is this safe for work, sir?
Convergex, yeah. It is. It was to the tune of, so imagine this, to the tune of Yankee Doodle. It was Tippy Tubby bought some calls wearing a trading jacket, bought some calls from a covered call fund, and sold the underlying basket. So that was
bit of a haiku there.
Yeah, well, imagine it sung to Yankee Doodle. So,
by the way, Tippy Tubby, not too far off the mark at RMC from what I experienced. Let me just leave it there. Let's look at some other things. So we'll get into this more if you're into the all things skew. We're actually going to do a deep dive into this in a little bit, actually on our TWIFO program in a little bit, talking about the skew out there and breaking it down with quick skew. But it was rocking and rolling earlier this week, actually. We saw the CBOE Skew Index spiking, hitting a high of about 154 and change. That was back about a week ago, actually, on the last Friday, on the 17th or so. So we saw skew coming up. I can't recall, since we've been doing this, a week where we've been just inundated with so many queries about skew. It's kind of crazy, the listeners, the readers of the site, social media, etc. All of them want to talk skew And it seems to be coming in two flavors, which is why is it popping off now? Of course, now as we're doing the show today, Friday, we're seeing that Skew Index coming in quite a bit. It's right around the low 130s now, so dramatically off its recent highs. But it has been still interesting to watch and kind of commentate. Why is it happening now? And then the corollary question to that we're seeing a lot is why didn't it pop off, let's say, a month ago when conditions, you could argue, were even more favorable? You know, we were still in a protracted run-up in the market. We were heading into events like the Fed and still had earnings on the horizon and things where there are a lot of times where you may want to pick up some protection. And, you know, that, of course, is the base reading of the Skew Index, people buying puts. Of course, as we said before many times on the show, there's a lot of context to that. There's things going on in the call wing as well that can make the puts look richer by comparison. So a lot of things popping off in there. But still, Mr. Rhodes, I'm sure you were inundated with questions about this this week as well as if we were. I'm sure you guys at CBOE obviously were. What is your take on this recent spike we saw in the Skew Index as well as the subsequent pretty aggressive sell-off?
Well, it's the denominator. It's near term or closer to at the money volatility as opposed to the out of the money puts being so expensive, because it is a relative measure. And I in the volatility index review that I did over the weekend, I described how it can rise for two reasons. And one of the reasons and this is not regular old skew, it's the Skew Index, that the Skew Index can rise is because we're in a low volatility environment, and it's all relative with the out of the money puts. It's something that I get more excited about when skew is high and VIX is at like 15 or 16 as opposed to when VIX is around 11 or 12. So I pointed it out, and it actually got pointed out to me first, and then I pointed it out and expanded on it a little bit. I do think it has some use. You had people talking about extremes with respect to the Skew Index of not meaning much, not meaning a whole lot, or being kind of useful. I think it's kind of useful. But you've got to, like everything in the volatility space, you've got to think about it with respect to the rest of the market. And when we're in a very low volatility environment, skew is going to go up.
Yep.
And we're going to blame it on the denominator more than the numerator.
I'm just waiting for that day, Russell, where CBOE puts out kind of a bifurcated skew. Let's call it call skew and put skew, and we break it down into two moving parts, because that wouldn't be confusing at all. It'd be awesome for us. It'd be confusing as hell for the broad public, obviously, but that would be great to see. That would provide that little bit of extra insight into what's going on in both, because when you take two numbers, you're right, it is the denominator. When you see two numbers going crazy like that, when they're kind of averaged together, taken together, people can sometimes jump to the wrong conclusion. So I would love to see that. I don't think it's on the drawing board. Maybe I'm giving you some work over there at CBOE, I don't know. But it would be nice to see.
Oh, I love work.
All right, speaking of giving people work, let's rope. Well, first off, Mark, do you have any thoughts on skew before we keep on rolling?
Yeah, like I said, it needs to be taken into context. It's always going to be, steep when vol's low, and like Russell said, it's the numerator and the denominator. Sometimes one drives the other, and that's where we are. I think that the CBOE Skew Index is a big thing they need to do, and is get it so it's at least semi-live streaming. I don't know why they can't do like a 5-minute moving average or something like that on the volatility to smooth out some of the little pops on those on those out of the money puts, something along those lines that would allow it to come up with something that would be available real time. I think a real time Skew Index would be invaluable relative to a static at night one. It would actually probably likely make markets more efficient, because traders would be looking for when that got out of whack as an opportunity to maybe buy at the money and sell out of the money versus the other way around.
That would be really nice. I'm sure we're not the first ones to hit them up with that request. But yeah, a real-time skew index. How much utility would that have? That would be very useful. Not that I mind checking my spreadsheet at the end of every day, but it would be nice to have it kind of in my face throughout the day. That would be great. All right, he had his little break. We're going to bring him back. Going to put him back to work. Going to turn back to Ricardo now because there's a lot, Ricardo, quite frankly, popping off in your neck of the woods, which is pretty much everything outside of these shores. You guys over at MSCI, you play here too, obviously, but you play pretty much everywhere else. You have products pretty much, what's the old joke? The sun never sets on the British Empire. The sun never sets on an MSCI product, pretty much. And there's a lot driving things from an international vol perspective. Obviously, as Russell was alluding to earlier, we have all the different elections coming up over there in Europe. We have the unfortunate events in the UK recently, always at least a near-term driver of volatility there. We have the tensions and the growing, will they, won't they dance out in Saudi Arabia and the Middle East over the oil and the production cuts, what's going to happen there. We, of course, have the ongoing Russian-U.S. tensions that never seems to drop from the headlines. Pretty much another day, another Russian scandal / headline for the Trump administration. Of course, there's the ever-present North Korea. And you name a hot-button part of the world, they're kind of heating up right now. So must be a lot of things, I'd imagine, popping up in your purview. So let's do that. Let's do a little international volatility review. What are you seeing? What are different sectors? Maybe we'll start, as we talked earlier, in the European zone, because that's kind of where a lot of eyes are drawn right now. What are you seeing over there from a volatility perspective? Maybe from an interest or trends or trading perspective? What's catching your eye over there?
Yeah, I'd say so. Maybe stepping back for a sec. One thing which I didn't mention was one of the things that we talked about at the RMC conference was just also the changing nature of international markets. So when you think of emerging markets, for example, so going back, say, I think 25 or 30 years, emerging markets made up only about 1% of global equity market cap. Today, fast forward 25, 30 years later, global markets make up about 10% of global equity market cap. So global meaning global developed and emerging as well. Now that's interesting. So you've basically seen a tenfold increase in the weight of emerging market stocks in global equities. What's really interesting is when you look at other metrics, so if you think, say, like GDP, so I think emerging markets make up about 40% of global GDP. Overall, developed markets make up the other 60%. So if you think about where we were 25, 30 years ago, where we are today, and look at that relative to just economic output as measured by GDP, think about where we're going to be in another 10, 15, 20 years. So fast forward 10, 15, 20 years, international markets, especially emerging markets, are going to make up, likely going to make up a really significant percentage of global equity market cap weighting. And what that means is that investors that are investing internationally are going to, over time, continue to increase their international equity allocations, and therefore they're going to need the risk management products, the access, the trading, et cetera, et cetera. So that stuff, that's a really interesting point. Now going back to specifically what we're seeing in terms of vol, I kind of mentioned it before, but I think the biggest thing that I've seen is just the spike in EM vol over the last couple of weeks. So if I look at, say, like 30-day running vol, U.S. is still pretty low. It's about 8%. IFA, so international developed ex-US, is pretty close. It's about 8 or 9%. But EM vol has just really spiked over the last couple of weeks. It's running 30-day vol's running at about 11%. So what's driving that? So EM this year, they're having a relatively good year in performance. I think year to date they're up like EM markets are up like 12% relative to IFA, which is up 6%. US is roughly up about 5%. But month to date, totally different story. So EM's had a bit of a sell-off over the last couple of weeks. So EM month to date's down 3%, and that vol has spiked. So what's driving that? I'd say the biggest driver has been at the moment LATAM. So Brazil has had a rough couple of weeks. in the markets. That's been probably, I think, the biggest loser in EM markets at the moment. So I think that's driven EM vol. So there's definitely been a bigger dispersion in vol over the last couple of weeks. That's probably the biggest thing that I see going on in the market right now.
So Latin American sell-off there driving a little bit of a spike in the emerging markets. So yeah, interesting to see, kind of how this vol plays out around the globe here. Latin America probably wouldn't have been first people's guess for a driver of vol right now with so many other things going on. But, as you said, it kind of blends into the mix. Anything you're seeing, you mentioned emerging markets and the EEM stuff. Anything you're seeing maybe particular to, as Russell was saying before, the French elections, things coming out of Europe that, we've all been speculating for a while have been big drivers of why things like, let's say, the VIX Futures have been so rich for quite some time, even though there's realized vol in the marketplace last couple of sessions notwithstanding has been pretty anemic. We have this huge disparity between realized vol and what the VIX Futures were telling us would come in a little while. So we were all, guesstimating that it was European elections as well as a few other things baked in there. Are you seeing anything in your products over there, particularly maybe to the Eurozone, that would confirm or perhaps shatter that hypothesis to a million pieces?
Yeah, it's tough to say. We could probably collectively come up with a list of like 20 or 30 things that should be driving European markets. That said, vol's been pretty muted. It hasn't really moved. There's been an uptick, but that's pretty much followed the uptick in U.S. vol as far as I can tell. So I can't think of any one particular driver of European vol just because I'm not seeing it. But again, just going back, the biggest driver, the biggest sort of change I've seen is in the emerging markets vol.
And if you had to say, obviously you're the keeper of all the MSCI derivatives suite. If you had to say right now, there's one particular product that you're seeing a huge demand for, you're getting hit up, a lot of questions about. I know you've been like me, you've been doing the conference circuit of late. You were at RMC, you were down at FIA Book, a bunch of other places. Is there one particular product or maybe one particular region that you're getting hit up a lot of right now? There's clearly a ton of interest in versus maybe there was a month or two ago, or is there nothing really stand out for you over there right now?
Yeah, well, definitely we've definitely seen upticks in activity on MXEA and MXEF, which are the cash settled index option versions of options on EEM and EFA, and that's in line with definitely on the futures side. So the EM and EFA futures, those that trading continues to grow high double digits year on year. So that's probably more structural than tactical trading. That growth continues to just hit record highs pretty much going into every quarter end roll. But that's more of a structural growth of those products. But that's certainly feeding into the ability for participants and market makers to lay off their risk in the index options market, which we're definitely seeing that trend.
Yeah,
to grow.
It is kind of interesting to see how these things develop. Usually, when we see some sort of maybe localized driver in volatility, let's say an election or some sort of other event that drives interest. We saw this a couple years ago, of course, with the Russian-Ukrainian issues going on there. We saw a lot of interest in and spread trading between VIX and, let's say, VSTOXX. That was a big driver there. So these little localized phenomenon can cause a lot of interesting spread trading going on. Probably seeing a lot of that right now. In fact, we are between a lot of European vol-related products and the U.S. We'll see if that dies down post-election. But always interesting. I think that's something we don't get a chance to do perhaps as much. We used to do it a lot when Jared was a part of the show. He used to be our kind of go-to international guy. Maybe we'll have to bring Russell. We'll have to bring Ricardo on. Russell's already on. We'll have to bring Ricardo on more frequently to kind of check back in on all things international because, it's not all just here, domestic U.S. It's not all just VIX. There is a lot of other things cooking off. But we do have to get to VIX itself as well. It has been a hot week over there in the mothership, VIX options hitting a lot of records. Talk about streaks and records being broken earlier in the broad indices. You saw that in the options as well. Hit 2.2, almost 12.3 almost million contracts open out there in VIX land. If you've listened to this show, it's usually between 6 and 8, maybe 10 on a pretty good day. So to hit 12, over 12 is a pretty high OI out there. That was the highest since about March of 2015, which was kind of coming off. Actually, no, that was before the turbulent period, but still a lot of stuff popping off in that realm as well. We also saw volumes hitting a high, at least for this year. And this week, again, was a pretty aggressive week. We are seeing, like I said, that ADV had trended south of 600,000, been sitting there for quite some time now. It has been slowly, inexorably moving north, a sign that volume is returning once again to the VIX options. And we saw another aggressive days this week, including Tuesday, 1.6 million contracts. So we're starting to see VIX putting up those 1.M days again, which is good to see. Wednesday, close to about 917,000, 785,000 on Monday. So a pretty aggressive time out there. And overall, open interest still fairly even, about 2.5 to 1 calls over puts. So calls not getting the lion's share of the love. And maybe once you see our top 10 rundown for hot strikes this week, you'll see why. Because number one with the bullet this week, in spite of all that OI, which by the way, a lot of that has come off. So it was kind of very, very short-term OI. It was a spike to about 12. Now we're at about 8. So which is more probably reasonable for this time. Again, a lot of that trading into what we saw going on Tuesday. Let's see here. Number one with a bullet. The first time in a while we've been able to say this. Puts and April 13 puts with about 326,000 contracts open, which is interesting. Again, a lot of that, of course, March having, at least a lot of the March haven't come off the board. So we're playing mostly in APE these days. APE 20 is number 2, 320,000. And then number 3, once again, the puts, APE 12 puts. So remember we used to say the March 12 and 13 puts were the hot put strikes. Now, fast forward that to April, and that's still the case. 311,000 of the April 12 puts lighten it up. And then number 4, the APE 15 calls, a little more reasonable call, 301,000. Number 5, the APE 18s. Number 6, the APE 17s. Nice little April call strip here with about 253,000 open to those. So we're dropping off a little bit there. Number 7, the APE 19s, 250,000 is about 250,000 exactly. Number 8, the APE 23s, about 250,000 almost exactly as well. Number 9, the APE 25 is getting a little bit more optimistic. Maybe I think 25, as you said last week, is probably the new 30. The 30s don't appear to be hitting our radar again anytime soon. I think we spooked whoever that was who was trading that. We spooked them definitely by talking about it so much here on the show. 242,000 of the April 25s. And number 10, rounding out our top 10 hot strikes here this week, the APE 16s with 226,000. Total, about 8.1 or so open, about 5.8 on the calls, about 2.3 million on the puts. Before we get to, actually, let's do it now. Let's break it down. That was the mothership stuff. Let's get to the weeklies, because we want to talk all things weekly, including Mr. Greasy Meatballs Flies. Let's get to Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody. Mixing up the order a little bit this week, keeping Russell on his toes. We're doing the weekly second. All right, this is, of course, the time for Mr. Rhodes to regale us with we have about 18 minutes left, so about 18 minutes worth of weekly VIX options action. Mr. Rhodes, what was catching your eye from the options mecca that is, what was it, Lenexa, Kansas?
Dude, no, I spent most of the week in Athens, Ohio.
Oh, so even more of the options mecca.
It was a good time. The only college derivatives club for undergrads at a university in the U.S. is at Ohio University, and those kids knew their stuff. It was actually a lot of fun. So today there's an awful lot going on in the April 26th weeklies.
Who would trade such a thing?
I don't know.
Madness.
Somebody keeps selling the 15 calls and buying the 16 calls over and over and over again. They just can't get enough of that stuff. Yesterday, somebody was selling the 15 calls for 98 cents and buying the 19 calls for 8 cents, taking in 90-cent credit. Somebody was doing the 14, 16 call spreads, that are also April 26 options, and taking in 40 cents. I can't read my writing on that one, so we don't get to see what that is. Somebody sold the March 29th 12.5 calls for 90 cents and bought the 19 calls for a nickel. No, they bought both of those. They actually bought both of those in separate trades. I wrote this so long ago when I was preparing for the program that I forgot what I did.
Did somebody buy a call stupid on the April 15s and 16s? Or is that a call spread?
They did. I was looking for a spread, and then somebody also did a stupid. There have been both. And then there's somebody that's been doing a ratio spread in the 15s and 16s as well this week.
Wow.
I know they're all over the place. What you doing, Mark?
I keep trying to.
I want to check your fly now.
I just did. It's pricing it. I can buy it a penny cheaper than I bought it than I initially put it on. So it's still basically priced right there. It's made that week is starting. I continue to be shocked that week is cheaper than the standard April contract right now, and it just doesn't make a lot of sense to me. I think that there is a ton of value in that April 26 contract. I really like owning it, and I'm gonna continue to be bid on that just against my positions. Right, this is not just a standalone trade, as I've said many a time. I have a book of positions, but with how that fits my book, I'm a standing bid to try and buy that. And can I just say something? I know this is a little off the weekly thing, but if I have to quote one more call spread versus put risk reversal in April, I may just quit trading altogether. If you looked at what Mark read off for his top 10, I mean, the amount of times people have tried to sell me the April 12s, 13s, and 11s to buy the 1723, 1621, 1721 call spread is maddening.
Mark, you left the pit, but the pit never leaves you. They're still calling you up to make you do these ridiculous combos and ratios.
And they trade, but just, I mean, we get it. You want upside and you want to finance it with a put. We get it. All right. It's just it's getting old, and but that has been the trade, untied and tied. I mean, I think I've probably seen that spread in particular go up. Maybe I think I've seen that trade, some variation of that trade go up 25, 30 times this week. I mean, it's just been nuts. That's driving all the volume.
Yeah, it is funny. VIX very much tends to go in flavors or narratives. For a long time, it was, of course, that short one, long two ratio. Then we started seeing ratios in the puts. And, of course, the upside financed by puts has been a kind of a go-to, not as aggressive as it is now, but looking at our hot strikes, you're right, that definitely is leading the charge. People tend to the lemmings tend to flock certain ways. And part of that is the way the product performs. Certain strategies work better in certain setups. I get it. So people kind of move to that en masse, but it is still, you're right. It's like everyone's got to have this thing this particular week, and it is kind of interesting to see how VIX, more than a lot of other products, seems to play out that way. Yeah, I think we've definitely spooked. Maybe it's our friend from the 30s. He's come down to the 25s and he wants to finance them with some puts, Mark. Maybe like a 22-25. He's getting a little bit more realistic, shall we say? All right, let's do a quick hit on commodity vol, and we'll get into some of our questions here. Of course, we have seen vol out here in all things commodities. The oil has been an interesting one to watch. That sell-off really sparked a nice little return of volatility for WTI and related products. Of course, it was very short-lived. It didn't last too long, as you might imagine. When these sell-offs don't continue, at least not in the same aggressive manner in which they started, guess what? The vol kind of comes in. That's kind of what happened out there in WTI. Even though it is a little bit elevated to where it was about a week or so ago out there, about 30 now, where OIV and OVX have been kind of hanging around at 25 for a lot of the recent periods. So slightly, mildly elevated, but certainly below the recent highs it hit, I think, about 36, 37 during the whole sell-off craziness. Seen about 12.5 out there in the gold VIX as well. Good old GVZ. Of course, if you like commodity vol, stay tuned. We'll get into a lot of that in short order on TYVIX. But before we head off, anything, Russell, Mark, or Ricardo, when it comes to all things commodity vol, could be the Texas tea, could be the shiny stuff, could be something else. Maybe, who knows, fluid milk catching your eye this week from a vol perspective. Anything out there?
Who wants to trade some butter?
Yes. Believe it or not, we did get a question on our other show about the dairy products recently, so I have been forced to look into those of late.
Who wants to trade some butter? Just one thing to keep an eye on with respect to gold. The gold skew for the GLD options is really leaning up in the air toward the call side.
Mm-hmm.
So don't be shocked if that's the next direction we get out of gold.
I would fade that. Gold is you're right, but I would still fade it just because gold's such a silly asset.
You don't like shiny things?
No, listen, if you think the world's going to end, what do we buy, folks? I've talked about this many a time. Bullets and guns. Firearms and bullets, not gold. So all you tinfoil hat wearers, buy Alcoa and guns, not gold.
Ricardo, another question for you, because we like to hit on international stuff, but MSCI, you play in more arenas than that. And another area, I think Ricardo's good. Ricardo's kind of like the guy who brings a lot of the stuff we don't get to talk about a lot here on the show. Another area we don't really hit on a lot for a variety of reasons is FX and FX volatility. What are you guys seeing out there in all things FX under the MSCI umbrella these days?
Yeah, the one thing I was going to talk about, which we didn't really get into a lot of detail, maybe it might be interesting to do a deeper dive into that in future episodes. But the interesting thing about international markets, so we talk about EFA, we talk about EM, but we tend to look at it in terms of equity returns. But when you think about EFA and EM, there's also a really large FX component to that. So when you're actually trading EFA or EM or options on EFA, EM or MXEA, MXEF, whatever the case may be, you're actually getting exposure to both the equity returns and the FX returns. And the reason I wanted to bring that up, the reason I think it's important is because I was looking at some of the numbers as we were talking. And what's really interesting is talking about European markets and EFA. When you look at EFA returns, I think over the first, say, 4 to 6 weeks of this year, while EFA was up, the equity markets were actually pretty flat, and most of that return was driven by the FX component. And I think that's something that a lot of people don't really consider when you're trading in these markets, is that when you're trading EFA, you're trading options on EFA or options on EFA. You're actually trading both the equity risk and the FX risk. So I thought that was just an interesting point since we jumped over to non-equity stuff. I wanted to kind of highlight that. That's maybe something to think about and we can kind of dig into that in future episodes.
Yeah, that's an element. You're right. We don't really consider. I mean, you have all these products, you see them kind of just quoted to you. You don't think of, when you're trading them yourself, internationally, you have the currency risk involved. But some of these other products, you're right. That is a little bit of an element, maybe an interesting driver of volatility for the future. People are always writing to us saying, hey, this week aside, VIX is kind of languishing, volatility is languishing. Where can I find some vol? Maybe the international spectrum and some of the currency stuff may be an interesting place to look. We'll get to that in a future show. Though. Right now, we got to get some of your questions before we get to the crystal ball. So without further ado, let's hit up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. We got a lot of questions. I want to get this one, though, because it kind of came in and it kind of relates to what we were talking about last week. If you recall, listeners, we got a question, someone writing into us, asking us about using short puts as a way to get long in SVXY, which is, of course, the short VIX short-term futures ETF. Well, we have a kind of related question coming in this week from FKSTHLM. He or she writes, hey, you guys discussed put selling on SVXY last week on Volatility Views without mentioning the risk that this ETP could actually go to zero overnight. Is a doubling of VIX futures overnight impossible to happen in the future? What would happen to open options positions if so? And he also includes, this is why I love the listeners to this show. They're so hardcore. They actually will go read the prospectuses of these things and then send us excerpts, which I love. And he does exactly that here. He sent us an excerpt from the prospectus for SVXY, and he highlighted the relevant chapter. So thanks for that. And he writes here, there's a whole bunch of warnings. They highlight the use of leverage positions could result in total loss of an investor's investment. And he highlights here, inverse positions actions can also result in the total loss of an investor's investment. For the inverse fund, a single day or intraday increase in the level of the fund's benchmark approaching 100% could result in the total loss or almost total loss of an investor's investment, even if such fund's benchmark subsequently moves lower. And yes, this is a good point. You know, I say this a lot whenever we talk about these kind of these Franken ETPs, you know, these hybrids that are created in and around VIX, and they come in every flavor and every leverage and every ratio you can think of. I say it a lot. Maybe I kind of stopped saying because I thought I was maybe beating it to death. Maybe I should say it again whenever we discuss these things. But these things come, all these ones, even the super liquid ones, come with huge caveat emptors attached to them for reasons like you just point out. When you start digging into the prospectuses of all these things, and the more exotic they are, the higher the things are, they all have these gotchas built in. They all have these issues that could cause problems. And we've kind of hit on a lot of these before. I felt like I was kind of maybe bashing them undeservedly, so I kind of stopped bringing it up. But that's kind of our standard disclaimer for all of these things, is that they all have these kind of issues. And yes, this is particularly one, but there's even unknown unknowns. Look at TYVIX and how it imploded due to fund flows. That's not in the prospectus, you know, so there's even external risks that could have. That's why we tend to steer people whenever possible into some of the mothership stuff for the reasons that at least you kind of know what you're getting there. There's no esoteric things being piled on top of it if you're trading a VIX option or a VIX future. But that said, there is a market for these things and people are interested in that. And your point, so when we were saying that was decent last week, I think that was kind of with the implicit acknowledgement that these things could happen. But yes, maybe we should be more explicit in stating that going forward. And yes, that can happen, of course. I mean, nothing's impossible. It's improbable, perhaps, but not impossible. I don't know, Russell, you're our keeper of all things data. Right now, on the spot, when's the last time VIX Futures double overnight? Go. I'm guessing by your silence you don't know the exact
Never. I don't think we've ever had a double. And I'm really going to have to pass on this one.
Yeah, that's fine. I know I like getting you in trouble, but you know, it is an interesting thought. Mark, you know, we talked about this before too. You know, kind of it all comes down. The devil is quite literally in these things, in the details. You know, these prospectuses. I like to say, just slap caveat emptor on all of these things, particularly if you're getting in something like this, which is of course you're already talking an ETP on a derivative of derivative. This is a short VIX, short-term futures ETF, so. You kind of have to hope if you're playing with this guy, let alone writing puts or selling puts, get into a short VIX futures ETF. You kind of hope you have a little bit of savvy to understand these things can kind of go on. But, you know, we've seen these things melt down before. What do you have to say here for our friend and his concern about this thing going the way of the dodo?
I mean, I think you just need to – I mean, all of these obscure products tend to move that way. You know, one of the things to recognize is once you're an ETP or an ETF company – if there's a chance that an idea could get traction, they're going to slap it at the wall because they already have these products. Once you build a few products, it's very easy to just roll out other ones. The friction is low and the cost is low, so they throw a lot of these out just to see what'll happen. And you know, this is one of those products. Somebody thought it was a great idea. People don't seem to be thinking so.
Yeah, you know, it's interesting. Yeah, we can probably get in and spend a whole episode into the nuances and issues of some of these things. But yeah, that strategy, I mean, if you're going to be working limit buys in these things anyway, writing these puts is a better approach as long as you are cognizant of, you know, you're writing puts, the big issue is gap risk. And if you're concerned about gap risk, then obviously spreads, or perhaps if you're more comfortable in these scenarios with the overnight, perhaps you do want to work the limit underlying. Instead, at least you'll get filled hopefully at sometime a little bit better level. But that said, yeah, caveat emptor with all of these things when you're trading them, even the deep, big liquid ones, because they all have these little gotchas lurking in their prospectuses. We should do a whole show, prospectus breakdown. I think we terrify a lot of people. But instead, we'll keep on rolling into our final segment. Good question. This is the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball. This is the portion of the show where we prognosticate recklessly, some may say wildly, about the future of all things volatility. And, you know, we're crushing it this week. Out of the park. our guesses are so good. This might be our worst week in some time, quite frankly. We've been pretty good. We've been actually eerily prescient a lot. I won't point fingers at who's been kind of eerily prescient, but if you could see me, my thumb is pointing at me of late. It's been all right. Russell had one or two. Maybe Mark had one or two too. But yeah, eerily prescient of late. And then this week, yeah, all of us swinging and missing. Maybe I blame myself. I kind of kicked off. I went first last week. I kicked off the kind of lower vol trend, and Mark and Russell kind of just got sucked into the vortex to the downside. So I will happily take the blame for leading everyone off the cliff this week with my lower vol prediction of 10.65, which as the show comes to a close, VIX Cash rallying yet again over the 13 handle, about 13.08 or so right now. So not exactly close. The closest, in air quotes, was Russell with 11.11. That's not really a winner either. So I'm going to say we all lose. And I'm instead going to give pride of place to our guest, Ricardo. Ricardo, this is the portion of the show where we all attempt to embarrass ourselves for the week to come. So if you had to guess right now for this time next week, end of the show next week on Friday, where do you think VIX Cash will be? Have at it, sir.
Oh, man, that's a tough one. You're putting me on the spot.
It's the on-the-spot segment of the show.
So my guess is we're going to be a little bit higher. What that number is, I don't know, but that's what the guess I'm going to go with.
A little bit higher. So we're at 13.10. So you're going to say like 13 and a quarter, maybe?
Let's say 13 and a half.
13 and a half. Okay, interesting. Russell. He's stealing your upside thunder. I like it. So Mr. Rhodes, what do you have to say to that? Someone coming in stealing your upside.
First off, I want my win.
That's such a meager win. You really want that?
You can't do that.
Two handles away? Do you really claim that? Okay, fine. I will give you your two-handle away victory.
That I win, you take it away
yes,
from me?
That is. You're right. It is kind of infrequent for you. I do feel bad. So, okay, I will give you this pity victory. You were off by two handles, but technically you were the closest, so therefore you win. Congratulations, sir. The crown is yours.
Really? Look, that's like Bob Barker saying the person that guessed $1 didn't win because it was too far away. I'm playing by the rules.
I told you, we're not doing Price is Right rules here. All right, go ahead. Take your victory.
He's got a point there, though.
Yeah, thank you, Mark. Wow. Agreement. I'm going with around 1280 or so. A little bit lower than where we are right now, but not much.
1280. Mr. Sebastian, what's your fly telling you?
I'll go last. You go.
Okay, fine. I felt bad for luring you guys all to the dark side last week, so I thought I would go last, but I will go second to last this week. We're at about a 13.15 or so right now. Mr. Ricardo's on the upside, Mr. Russell on the near downside. I'm going to go. I still think this is a we don't have healthcare, but that's a whole kind of mess. So let's go. Getting into the political aspect is always fun. I'm going to go a little bit shy of where we are right now. I'm going to say. Well, Mr. Russell kind of squeezing me there. I'm going to go a little bit shy. I'm going to go about 12.50 this time next week. So still mildly elevated, but not quite where we are. So, Mr. Meatball, you got a lot of downside ahead if you want to go that way.
Yeah, and I'm going to. I'll take 12. I think we're going to be below 12 by next week.
So you want 12, or do you want below 12? You want to put the little indicator there?
12 and below.
12 and below.
12 and below. Needless to say, and let's remember, my outlook may be my position.
Can't we all say that at the end of the day? All right, that music means we have come to the end of yet another epic journey. And what an epic one it was. We literally went all around the world here on Volatility Views today. But before we go, one last time, let me check in with my cohorts, my partners in crime here on the Vol Views panel. Since you're our guest host, Ricardo, you get to go first. If listeners are interested in what you're talking about here, all the different suite of MSCI products and things, where should they go? What should they do?
For more info on MSCI, definitely check us out on the web, www.msci.com, and with our friends over at CBOE as well.
And if you want to follow them on Twitter, they're MSCI_Inc. So there you go. Follow them along. I think we've been tweeting out some of their stuff this week. So if you follow us, just follow them, and it'll be nice and easy. All right, and let's go next. Mr. Rhodes, where are you going? What are you doing? What's cooking in the land of all things CBOE and live ball?
Oh, gosh. I'm going I've got two things coming up in New York. I'm doing a small cap summit on Tuesday next week. And a week from Saturday, I'm speaking at the largest college student conference It's like 4,000 or 5,000 students from all over the world for what they refer to as GAME, which I think means Gaining Asset Management Education. I'm speaking next Saturday morning there. And going to visit our new New York office. We've had a New York office forever, but I'm going to go visit those guys as well, like I've done in Lenexa, Kansas today.
Doing the world tour. I got to say, from after talking to the new CBOE management group from formerly of BATS down at FIA Boca, they're big fans of the Institute, so it sounds like you're going to be a busy guy. They're going to be sending you hither and yon a lot more to do in Institute days coming up. I'm looking forward to seeing that. And last but not least, Mr. Meatball, what's cooking in the land of Carmen Line and Option Pit?
Read our blog every day, optionpit.com/blog. We do video content there, written content, and all sorts of fun stuff. So go get it.
There you go. Go get it. Optionpit.com/blog. Maybe while you're there, sign up for a webinar or two, perhaps even the masterclass. Check that out over there, optionpit.com, to learn more. And on behalf of Ricardo and Russell and Mark, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. Some in the chat room asking, were you talking about VIX? Yes, we were talking about VIX a lot. You missed it. Tune into the recording to check it all out. We want to thank all of you for downloading, streaming, subscribing, and joining us live. We'd love to see you guys there too. And we'll see you next time for more Volatility Views. And if you're in the chat, come back in about 25 minutes or so. We'll be doing a deep dive into all things commodities on TYVIX.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.